Stocks see a sharp slide with IT stocks getting battered after a slump in US tech names overnight. Mid-caps also feel the heat as risk aversion spreads. Realty and metals are the other big losers. A recovery in Novelis is a few quarters away, Hindalco MD Satish Pai tells CNBC TV18. Though he expects FY27 to be better, a sell-off in metals and a step-up in debt also weigh on the stock. Axis Bank CEO Amitabh Chaudhary says acquisition of Credit Access Grameen is pure speculation. He, however, adds that the bank is in early evaluation stage of the opportunity and a decision has not been taken to pursue or opt out. CNBC TV18 had reported that evaluation for a possible deal was on. While the IT sector has seen a sharp and indiscriminate sell-off, the former CEO of Infisys, Vishal Sikka, says that there is a gap between AI's promise and enterprise-ready reality. Sikka says while some disruption will hit now, others will take years to show up and will all differ company by company and line by line, but warns don't assume slow adoption means no disruption. Hello and welcome to Business Lunch, live from the CNBC TV18 Motilal Oswal studio. I'm Arundhati Ramanan. Good afternoon, guys. Let's take stock of where the markets are at today. It's all red across the screen. And if you take a look, the Nifty at 25,545, not at the lowest point of the day, but, still a percent in the red. The Sensex, same mid-cap index, is faring worse than those benchmark indices. But the Nifty Bank, doing slightly better, but also 0.7% in the red. But if you take a look at those stocks that are lagging, it's the metal packs on top. And if you take a look at that index, we've got Hindalco, Hinzinc, and NMDC, all of them down between 4 to 5%. If you take a look at Hindalco, that's reacting negatively to its numbers, seeing big cuts over there. The realty pack is also feeling pressure. Prestige, DLF, and Brigade seeing deep cuts down about 3% each. But the IT stocks, we were seeing some recovery there, but that's also been sold into. And if you take a look, all of those stocks under pressure, L&T Tech Services, Coforge, TCS, all of them down between 2 and 5%. And that remains the top story this afternoon. Indian IT stocks continue to see sharp fall for the third straight session. The IT index sold off about 14% in the last 7 trading sessions as concerns over AI-led disruption continue to weigh on sentiment. Earlier today, we spoke to Vishal Sikka, the founder and CEO of VNI Systems, on the AI disruption fears, and here's what he had to say.
Things are always slower than we expect. Adoption takes time. Enterprises are very complex. They are like countries. Large companies are like civilizations. Some of them have been around for, hundreds of years, if not decades. So it takes a long time and even in terms of autonomy, there is a lot of still advancements to happen. Similarly, in the services industry, there are dozens of service lines. AI's impact on those service lines is not all uniform. It is not, doesn't happen overnight to all of them. Some systems are much more complex than others. And so the rate of change is always as slow as the slowest pipe in the network. But having said that, I used to say this 10 years ago, 9 years ago, whenever that was. And it is here now. And we have a short window of time in which to sort of transform. I think we have to separate the potential, the promise, if you will, of this disruption from how it impacts in the here and now. In the here and now, you have particular projects that people are executing on. And if a client expects that you now do this project dramatically faster or cheaper or with less people or whatever, then that would impact the here and now. But that is something that takes time. That's what I meant by depending on the service line, depending on the nature of the work, depending on the team that is involved, and things like that. So there is the fear in general of the potential of what this can do to knowledge work. But then there is the actual reality of creating an enterprise-ready offering that uses these new capabilities to deliver those. So there is a gap between them. The gain in productivity because of using generative AI can be quite substantial. I have seen examples of 20, 30x productivity gain and things like that. The important thing is that do we want to keep looking backwards? Do we want to keep looking at tasks that we already do? And do we want to limit ourselves to what we did in the past? Do we want to be afraid of the disruption and automation to the things that we did so far that brought us here? Or do we want to look at the opportunities of what are the new things that I can do with what we have in our hands? And I think, I focus much more on the latter. I have a small company, and life is a lot more interesting when you think about, my God, we have this incredible ability. What can I do with it? And I think when I look at it from that lens, it is incredibly exciting.
And even as global IT stocks plunge on fears of disruption by AI, capital continues to flow into generative AI companies. Anthropic, in its latest funding round, has secured $30 billion in investment at a valuation of $380 billion, more than double the valuation secured in its previous funding round in September. The latest round included portions of previously announced investments from NVIDIA and Microsoft, which amounts to $15 billion. This development comes after the latest Claude plugin was released, which can automate parts of the software development process, and revenue from Claude has also doubled since the start of 2026. And moving on, Axis Bank CEO Amitabh Chaudhary says acquisition of Credit Access Grameen is pure speculation. He, however, adds that the bank is in early evaluation stage of the opportunity and a decision has not been taken yet. Listen into his comments.
We will obviously evaluate this opportunity also, but we are in very, very early stages of the evaluation. We have not even decided whether we'll take the next step. But no, I mean, MFI is an important business. We've been building that business for quite some time. We have been trying to see how we can transform the business internally. Here, the question is whether you want to spend a chunk of money to buy a business from outside with all the, accompanying execution risks, or you want to build it internally. And that's a choice we will make at the right time. We are not in a hurry, absolutely.
Meanwhile, Muthoot Finance sees sharp cuts despite a strong set of third-quarter numbers. The management, speaking to CNBC TV18, also raised its guidance for FY26, saying it now eyes 45% growth versus the earlier guidance of 35% growth in FY26.
This quarter, the first 3 quarters have been good growth. We have seen in the last 3-4 quarters have been quite good. We have already grown the gold loan AUM by 36%. I feel that we should be able to do around 45% by the end of the year. We should reach that by 45% by end of the year. So that is, I think, something which we plan to achieve by the end of the year.
And before we slip into a break, here's a quick sneak peek into the stocks that we will address on Your Stocks today. Don't forget to catch fundamental and technical experts give their views on these at 2 p.m. today, only on CNBC TV18. Welcome back. You're still with us on Business Lunch. India's January CPI, as per the new inflation series, has come in at 2.75% versus 1.3% in December per the old series. Food inflation has risen by 2.13% after 6 months of falling food CPI as per the old series. Lata Venkatesh is here with all of those details. Lata?
Well, countries revise their CPI series so that you bring it in line with current consumption trends. So that is why we had to revise the series. It was earlier based on the 2011-12 consumption pattern. Now the base year has become 2023-24. This is needed. Now, what does the new CPI throw? January CPI, as you said, is 2.75%. If you gave the same weights to the old CPI series, then it would have been 2.55. So analysts are concluding that for FY27, the inflation may be 10 to 20 basis points higher in the new series compared to what it would have been if we had continued with the old series. Now, let me come to food inflation at 2.13 is a surprise because everybody was expecting food prices to continue to fall. The rise is because weights have changed within the food basket, and three products were really expensive, and that is tomatoes, coconut and coconut oil, and that explained the rise in food inflation. The surprise was the steep fall in core inflation. Core is non-food and non-fuel goods. And in the new series, it has come to only 3.4% in Jan 26. The old series was expecting it at 4.1 or 4.2%. So that is clearly lower. The likelihood it is lower is because the weightage of gold is less. Gold is an important element in core CPI, but it's come down from 1.08% weight to 0.6% weight. The other big change is the way in which they are computing housing. In the old series, there was nothing on rural housing, no prices. As well, employer-given houses, that is government houses, even those were included while counting the index. Now those two are excluded. Those are the big changes.
All right, thanks for taking us through those big changes, Lata. But let's listen into what the Secretary of Ministry of Statistics had to say on the new CPI series and its impact.
We have released the numbers for the last 12 months for the entire 2025 of both the old series and the new series. So you have a month-to-month comparison of the old series. And to link it to the previous series, which started in January 2013, we have given a linking factor. And we are following strictly the international norms in this, that the linking factor is given to get an idea of what would have been the changes and how to link the new and the old series. The actual number of 2.75 also reflects the actual prices. Month to month, the prices of different items vary, as would be seen in the details. Prices of a lot of the food items were still in the negative territory. There were some which were in the positive. But I think this time, the inflation numbers have been influenced by some of the personal care and the personal jewelry, which has had a higher inflation.
The RBI on Thursday announced it is switching some of its near-term bonds with the government in exchange for longer-term bonds. 75,504 crore rupees of bonds redeeming this year and next are being bought back by the government from RBI, and new longer-term bonds have been issued back to the Reserve Bank. Lata is here to explain what this means.
Well, the Reserve Bank and the government do this often when they want to reduce the burden of the borrowing program for the next year. Bonds that are about to be redeemed in the coming year are exchanged. The date simply changes from 2026 to be redeemed in 2040. So to that extent, the government does not have to pay RBI. That's why this switch happens. To give the arithmetic, government is buying about 58,500 crore of bonds which are maturing in 2026 and about 17,000 crore, 17,500 crore of bonds which are maturing in 2027. And together, it's about 75,000 crores. In exchange, the government has issued Reserve Bank 15-year bonds which mature in 2040. So to that extent, the government borrowing comes down for the coming year, that is FY27. It comes down from 17.2 trillion to 16.45 trillion. Now, this is very good news for the bond market because, they were staring at a really huge borrowing and now that is down. So early morning, we did see bond prices rise and bond yields fall by about 4 or 5 basis points. But as the bond prices rose, many people who had the old bonds came and sold it, and there was a lot of profit taking. The market is telling you that ultimately we have to buy even 16.45 trillion of bonds. That is smaller than 17.2, but that is still a large borrowing program. So the profit taking, took away the little bit of gains that we got.
All right, Lata, many thanks for taking us through those details. But on that note, it is time for us to head into a short break. More news and updates coming up on the other side. Stay tuned. Welcome back. You're still with us on Business Lunch. Moving on to the latest global developments. President Trump said the United States has to make a deal with Iran. Otherwise, it would be traumatic for Iran. He warned of consequences for Iran if they don't make a fair deal and thinks an agreement could be struck over the next month. Take a look.
We have to make a deal. Otherwise, it's going to be very traumatic. Very traumatic. I don't want that to happen, but we have to make a deal. They should have made a deal the first time, and they got Midnight Hammer instead. And this will be very traumatic for Iran if they don't make a deal. Look, if they don't make a deal, then it'll be a different story. But we had a very good meeting yesterday with Bibi Netanyahu, and he understands. But it's ultimately up to me. If the deal isn't a very fair deal and a very good deal with Iran, then it's going to be, I think, a very difficult time for them in the back. I guess over the next month.
Let's get you updates on the results of the election in Bangladesh. The Bangladesh Nationalist Party has returned to power after nearly 20 years, sweeping the general elections with a commanding two-thirds majority. Counting indicates that show the BNP and its allies crossing 212 of 299 seats, while the Jamaat-e-Islami bloc trails with around 70. The Election Commission's partial numbers place the BNP at 181 seats, with full results expected shortly. So we'll have to wait and watch what happens over there. But before we end the show, let's take stock of where the markets are at. They're doing better than when we started the show, but the Nifty still at 25,550, not at the lowest point of the day. The mid-cap index faring worse than the Nifty and the Sensex, but the banks managing to do slightly better. If you take a look at the indices, we've got that metal pack that's lagging quite a bit. If we bring up Hindalco for you, it's one of the top losers on the Nifty, and it's about 5% lower, reacting negatively to its numbers. And the Realty pack also not doing well in trade today. But if you take a look at the IT pack, it's been under pressure. That's what's been pulling the markets lower. We've got L&T Tech Services, Coforge, TCS, all of them down between 4 and 2%. But we are seeing some amount of recovery. If you take a look at Tech Mahindra, Persistent Systems and Infisys, those three stocks have managed to turn into the green. So all three of them mildly in the green, but seeing some recovery on that front. But with that, it is a wrap on this edition of Business Lunch. Midcap Radar comes up next and takes all the market action forward.